All right, so let's get right into it. It's late 2025, and two of the world's absolute oldest forms of money, we're talking gold and silver here, are making massive headlines for some very, very modern reasons. They are on an absolutely historic tear, and we are going to break down exactly what's going on.
First up, gold, the classic store of value. Well, it hasn't just broken its old records. It has completely pulverized them. We're talking a surge past the monumental threshold of $4,300 an ounce. Just think about that for a second. That's a wild gain of over 54% this year alone. And gold is not going to the party alone. At the exact same time, its little brother, silver, is in the middle of its strongest rally in more than a decade. It has just rocketed past $5,250 an ounce. That's an incredible year-to-date gain of more than 76%. Just unbelievable.
So, you have to ask the big question, right? What is behind this explosive parallel rise? Why are these two ancient metals suddenly the hottest assets on the entire planet?
Okay, let's get into the why. The answer, really, it starts with a handful of powerful global forces that have all come together at the same time to create what you can only call a perfect economic storm.
So let's break this storm down piece by piece. First, you've got the U.S. Federal Reserve basically telling everyone, hey, we're probably going to cut interest rates. That makes holding stuff like gold and silver, which don't pay interest, way more attractive. Then you layer on top of that all this geopolitical instability and trade tensions. That just makes investors nervous, and they run for safety. And to top it all off, you've got inflation that just won't quit, eating away at the value of your cash and a weakening U.S. dollar. It's the perfect recipe for uncertainty, and it's pushing investors everywhere to seek shelter in real, tangible assets.
And, this global storm, it has massively polished gold's reputation as the ultimate safe haven. It's classic. When the world feels unstable, people instinctively run to gold. It's just what happens.
And listen to this, it's not just regular investors. We are seeing a huge structural shift being led by the world's central banks. We're talking about countries that are actively trying to rely less on the US dollar. And what are they doing? They're buying gold at a record pace, over 1,000 tons a year, as part of this big de-dollarization strategy. This isn't just a fleeting trend. This is creating a massive foundational demand for physical gold.
Now check this out, because this is where it gets really interesting. Look at how gold is actually used. A full 50% is for jewelry. Another 24%, like we just said, is for central banks. Only a tiny little sliver is actually for industrial use. What does that tell you? It shows that gold's value is mostly monetary and, well, psychological. It's valuable because we all just agree it's valuable.
Okay, so now let's pivot to silver, because this is where the story builds. It's benefiting from that exact same economic storm, for sure. But silver has a second, incredibly powerful engine pushing its price way, way higher.
And bam, this chart just illustrates the critical difference perfectly. Just look at that. A massive 60% of all silver is consumed by industry. This is not just a pretty, precious metal. It is an absolutely essential ingredient for our modern, high-tech world.
Yeah, silver isn't just shiny. Its actual physical properties, it is the most electrically conductive element on the entire planet, make it utterly irreplaceable in some of the biggest technological megatrends that are literally defining our future right now.
Just think about the biggest trend shaping our world today, that massive AI build-out. It needs silver in servers and power systems. The whole green energy transition, well, it is literally powered by silver in solar panels and electric vehicles. And that global push for defense modernization, you guessed it, relies on silver for advanced electronics in everything from missile systems to radar. This isn't some abstract idea. This is creating a ferocious, long-term appetite for physical silver.
Okay, so to recap, we have soaring monetary demand for gold and soaring monetary plus industrial demand for silver. But here's the climax of the story. That unstoppable demand is hitting a giant brick wall.
And this isn't some new, shocking problem. For 5 straight years, the world has used more silver than it has been able to produce. This is a structural deficit. It's been building and building, creating a massive shortfall in the physical market.
And as you can see right here from this chart, the problem is not getting any better. Just look at the production levels. They are basically flat for almost a decade. So even with record high prices, which you'd think would make miners rush to dig up more, global output has been completely stagnant. It is just struggling to keep up with that soaring consumption we were just talking about.
To put a number on it, this has created a cumulative deficit of 500 million ounces just since 2021. That's more than 14,000 tons of silver that the world needed but simply couldn't get from new production. Now, inventories are being drawn down to fill that gap, but, I mean, you know that can't last forever.
This crazy imbalance has created what people inside the industry are calling a phenomenal economic environment. The margins for producers are, in the words of one executive, just leaping off the page.
So, with demand absolutely on fire and supply squeezed incredibly tight, where do the experts on Wall Street and beyond see prices going from here?
Well, the consensus outlook is really optimistic. I mean, Goldman Sachs sees gold hitting an incredible $4,900 by the end of this year. Major banks like ANZ see silver pushing towards $5,750. And some analysts, they're forecasting a move toward a jaw-dropping $78 an ounce by late 2026. The theme is pretty darn clear. The experts see a lot more room to run for both of these metals.
So I guess that brings us to the most crucial point of all. Is what we're watching just another cyclical price bubble that's going to pop? Or is it something way more profound? We might just be watching a fundamental, long-term, great repositioning, a permanent reevaluation of gold and silver's role in both our financial system and our industrial future. And that, well, that is the question that's going to define markets for years to come.